Good day, traders. Welcome to Traders Watch, our trading community where we share insights on the market and we give away free lessons on how to consistently keep trading profitably. Okay, so in this video, I'm just going to go over a few basics on trading. All right. How do you set up a trading account? Which broker should you use? And how do you pick up a trading strategy? Okay. So on the brokers, there is quite a number of brokers that you can choose to use. Okay, but I would recommend that for beginner traders, you open a trading account with a broker. Preferably, if you have never traded before, you would want to start with demo trading. Okay, so this is where you open a paper account where you actually don't have to deposit any money into the market. But what you just do, you just go on any broker, you open an account with them, give them. So basically to open an account, you just need your email address. You need your ID documents. Right, and then also your proof of address. And lastly, a bank account. Okay, so with these three, you can open a trading account and you can start trading straight away. But I would recommend that for beginner traders, if you are very new to the markets, to the global markets, you want to start off with demo account, right? This is where you're gonna learn how various instruments move, and then you're gonna practice on this demo account. I would probably advise that for starters, you want to go from 0 to 6 months just trading on a demo account. Now, someone can say, whoa, 6 months, that's a long time. But remember, you should also have your goals and your targets as to why you want to trade, and you should need to set that straight from the beginning. So if you're just trying out trading just for the fun of it, just to get that thrill, that comes with just maybe making a lot of money in a short period of time, then probably trading is not for you. And in the long run, you are most likely not going to be profitable. Okay. But if you're treating trading as something that you plan to do long term, then 6 months really won't be that much of a long time, because remember, now this is something like you're going to be doing for the rest of your life. So it might be very worthwhile to take the time necessary to prepare yourself and acquire the skills that are going to make you a profitable trader, and to avoid getting yourself frustrated along the way. Okay, now this is what you do when you're choosing brokers. You want to look at the various advantages and disadvantages of each broker per se, let me say. And also depending on where you are living here on the planet, some brokers may be available in some parts of the continent or some parts of the world, and they're not available on other parts of the world as well. So you need to check which ones are available in your area or your region. And you also need to check out if they are regulated or not, and by which bodies. Okay, because there's many brokers out there who are not very strictly regulated by a number of institutions. Therefore, they get to manipulate the prices as they please, and they're not answerable to anyone. Okay, so on my top list of brokers, which I would recommend that you play around with and just get a feel of them, for someone who's a complete beginner. I would recommend XM. Okay, so for XM, the reason why I want this is because most of the times they have a lot of bonuses. I don't know if they're still running that $30 zero deposit bonus. This you literally get as soon as you open an account with them and you are verified, you can claim this $30 to start trading with. And if you make any profits from it, you get to withdraw those profits. Okay, so now XM again, like I said, this is just for beginners. And then XNES as well is one of the best brokers that I can recommend. All right. Now, as you are getting more and more serious into trading, now you want to look at the big boys like OBEX. And the best one, according to me, that is going to be Pepperstone, okay? So remember, while you're still trying out these brokers, you are not exactly, what can I say, restricted to choose and go with any one of these brokers. You can open a demo account with them, with XM, with XNES, and with Pepperstone. There's nothing that can stop you from doing that, okay? Even when you're trading on a real account, you can choose to put some of your investments with XM, a bit with XNES, a bit with OPEX, depending on how much you want to deposit. But it is always a good practice not to put all of your money with one broker or all of your money in the forex markets for that matter. Okay, so now you want to trade. You have opened a demo account, or you've selected a broker, you have a demo account, or you have a real account. Now, what's the third stage from here? The third stage would be now to formulate or to build your own trading strategy, okay? Now, this is where it gets all interesting, right? You want to buy and sell. You want to participate in the market, but how are you going to know when it's time to participate and when it's not time to participate? Because I've seen that for most beginner traders, what hinders your growth as a trader would be indiscipline. I've met a lot of traders who struggle. You can make a winning account today, make a huge, enormous amount of money, double his account even, only to lose it, all of it, the following day. Where does that come from? That comes from being an indisciplined trader. Okay, so after you formulate a trading strategy, you want to make sure that you work on your skills, you work on your discipline in following the strategy. You'll find that here, this should probably be the easiest thing you can do in trading, and yet it still proves to be the hardest for most traders. Why? Because in as much as there is over, I could say there's over 1 million profitable strategies. Profitable strategies, especially for technical traders like myself, right? There is over 1 million profitable strategies. And all of these strategies, most of them are very easy to learn, right? So why do some traders make money and why do some traders lose money while trading? I think for myself, from my own experience, it always boils down to the issue of discipline, because you find that you have your strategy and it tells you that you should wait for 1, 2, 3 confirmations before you jump into a trade, right? But because of that excitement, you let your emotions get the best of you and you find yourself jumping into trades that you're not supposed to jump into. And then, or perhaps maybe you've entered this trade at this point, wishing to go long up to this level, right? This was your entry here. And according to your strategy, your stop is supposed to be there and your take profit is supposed to be there. Now, one of my mentors once said that the market will never move in a straight line, okay? So imagine you jump into this trade, right? And it starts doing this, going up and down, going up and down, going up and down. That time there, you need to have the emotional strength to still hold on and let your strategy play out, okay? Sometimes the market even loves to come back, okay? Instead of going all the way up, it can go back up to that level, comes down to retest here without hitting your stop loss. But what someone could do now, they'll be like, no, this is already a losing trade. I'm jumping out. And then you close your position with a loss, with this loss, right? Only to find that the market will then climb up again and even hit your take profit and continue. Okay, so to avoid that, every strategy, I haven't come across a losing strategy yet of all my years of experience. Every strategy has the potential to make you money and to grow your account. But what matters is, do you have the necessary discipline that it takes to be a profitable trader in the long run? Okay. Now, the third thing that you're going to need after you formulate a strategy and you have the discipline, you need to learn to have the right psychology. Okay. And by psychology, most people don't realize it, but every time that you make that you position a trade in the markets, what you're simply doing is just a guess with a probability of playing out or a probability of not playing out, depending. For most strategies, you find that they are accurate for more than 70% of the time, okay? So let's say your strategy is accurate approximately 70% of the time. Now, what you must know is that no two trades are the same, okay? No two trades are the same. Each trade is independent from any other trade that you have ever participated in, okay? So even if you've had 5 winning trades in a row, it doesn't mean the next trade has a greater chance of winning or it has a greater chance of losing. The probability will still be the same. So if your strategy is 70% accurate, each trade will be a unique and an independent event, and the chances of you being right will always be 70%. Okay, so why does this matter? Where does this come into play? Because there is a thing called risk management, right? Risk management. Now, if you remember my friend, the one I told you, he can make $100 today, lose all of it tomorrow, make $500 today, blow up a $10,000 account the next day. Why? Because there is a lack of proper risk management. All right, so this is what a long-term trader would do. Someone who wishes to trade the markets long-term. You have your investment, let's say you have 1,000 US dollars that you want to invest into the market, right? And then you never risk greater than 2% of your capital per trade, okay? Now, why do this? The reason is that when you're trading, you don't want to be very emotional. And mind you, this money here that you put into trading should not be money that you want to use for something else. It should just be money that you are just putting into the market as an investment. And every time you open a position, you only want to risk 1% to 2% of that. All right. So if you are trading a 1,000 US dollar account, your 2% would be, that would be exactly $20 per trade. So it means every trade that you're opening in the market, your stop loss should be exactly at where you are going to lose $20 if that trade goes against you. Okay. So if you lose $20 from 1,000 US dollars, you still have many more other trades that you can take. You can still participate in the market, but it won't be very much emotionally taxing that you've just lost $20, okay? And then you want to also have a trading strategy that gives you at least an edge of 1:2 with the markets. What do I mean by this? Every time you are risking something, or every time you're participating in a trade, every time you get a signal from your strategy, it should be such that for every $1 that you lose, if that prediction goes according to your plan, you should at least gain $2. All right. So in this case, if you do take this trade, you risk $20. Hypothetically speaking, if the trade does not go against you and it's one of your winning trades, that means at the end of the day, you should close that trade with a profit of $40. Okay. Now, to someone, this can be like just a measly amount of money. You feel like you are not doing anything at all. But remember, if you can be consistent at winning, if you consistently do this, your equity curve at the end of the year could look something like this, okay? Continuous growth, because you keep adding the small amounts, the small wins will be compounded over time to make big wins, okay? And the last thing that I'm going to talk about in this video is that the big mistake also that beginners make is over trading, okay? So you are risking 1% to 2% of your account, fine, but you find yourself taking 10 trades a week or 10 trades a day, depending whether you're a swing trader, a day trader, or a scalper. Okay, so for any beginner, this is according to me, a very large number of trades. All right, so I would suggest that you focus your energies on maybe just trying to find maybe 2 or 3 good trade setups per week. Okay, and then by focus on them, what I mean is, let's say you are trying to go long on the DXY. Okay. Yeah, perhaps we should use this chart. Let's say at this point here, right? Your strategy actually gives you a signal. The market has been selling. Now your strategy suddenly gives you a signal that now is time to buy, depending on which signal you, depending on which strategy you use. So you enter here with your 2%, right, at this level. Instead of trying to get into another trade with OD US dollar or Euro CAD, you focus on this. So that means now you are tracking this market back to back. So the market goes up, right, gives you a bit of profits. right, and starts consolidating around these levels here, right, you can also add another position. For me, I'm an Elliott wave trader, so I'll be counting these waves, right? Whenever I get a correction like this, at the correct completion of a correction, I can still add to my positions, right? Now I have these two trades running, and already they would have retraced more than 50% of this final swing here. So what I do, I'll try and move my stop loss to break even. Right now, I'm running this trade risk-free. When the market starts doing this, you can collect part of your partials here. You're already adding to your account, right? At this level here, I get another entry. I can add another 2%. The market goes up, right? Goes up until boom, you collect your final take profit at that level. Okay, so it has, in as much as it was one trade, but you have managed to scale in, right, on the trade. Suppose it's a losing trade as well. Okay, so you would have tried to get into a trade. Let me see if I can get an example. Okay, so let's say you buy here, right? You buy with your 2%. And the market goes up, starts coming down correctively, right? At this level here, you can see that really the market is not going in your direction and it's gonna come and take you out at a loss. So you would have, in order, already a stop loss at this level, where if the market is to go against your prediction, you are only going to lose only that 2% of your account, okay? All right, that's all that I had for you today, guys. Watch out for the next video. I'm gonna share with you guys my own trading strategy, okay? How I actually look at the market for setups and how I come to spot good or winning trades within the markets. All right, until next time, please trade responsibly. Cheers and bye-bye.